Hi, I want to welcome everyone to today's webinar. Ryan Fisher, we have Ladislaw Maurice here today talking about what's going on globally and how to diversify. We'll just hop right into this. Quick disclosure, Camel Plan does not endorse, give any tax, legal, or investment advice. Consult with your professionals, CPAs, attorneys, etc., before making any investments. This is my contact information. I can help anybody that's interested in using retirement accounts such as IRAs, 401ks, Roth, SEP, Simple, health savings accounts, etc., to make these alternative investments. A little bit about Ladislaw. I'll let him get into that. And welcome.
Hey, how you doing, Ryan? Thanks a lot
Good,
for
thank
having
you.
me on your podcast. I really appreciate it. Cool. So a little bit of a background on myself. So I studied in Canada, international business, then went to law school and business school in Australia. Ended up working for Nestle, the big food company, at their headquarters in Switzerland, and was then expatriated to Africa for 7 years. So my last role in a real job was on the executive board of Nestle Ghana, in charge of the milk business for a few West African countries. And then at the age of 30, I quit. I went traveling. My plan initially was to get a job in Dubai, but as I was traveling, I saw a lot of opportunities, and specifically in real estate. And I started to do flip operations in different countries. Because the reality is, when you're working full-time, 50, 60 hours a week, you don't have enough time or even, brain space to manage your own assets well. But I found myself in a situation where I had money and the time to manage my money. And then I saw relatively quickly that actually I could manage my money full-time and make a living out of it. So this is how it all started. So now it's been approximately 6 years, and I've been traveling around all over the globe doing real estate deals in North America, in Eastern Europe, in the Balkans, in the Middle East, in Africa as well. And now I'm increasingly looking at Latin America as well. So, and then I started this blog called the Wandering Investor. It's a YouTube channel. So today the topic is, because it's something that I see people just do over and over, like mistakes that people make when they buy international real estate. So, I mean, there are a few advantages to buying international real estate in the first place. Why do people do it? It's good diversification. So you don't have everything in your country. So if something were to happen in your country, then at least you would have assets in another jurisdiction. So that's one very attractive point. Another point is that in many cases, it can provide you with a plan B. In many countries, if you invest in real estate, residency for yourself and your, sorry, the cut.
You cutting out a little bit there, and I lost your video unless you put that up. Can you hear me?
Yeah, I can hear you.
Okay.
Okay, I'm sorry about this. Sorry.
No problem. Okay. There you go. You're back.
Okay, I'm back. Really sorry about this. Okay, so it can provide you with a plan B in the sense that in a lot of countries, if you buy real estate, you can get a second residency. So you can go there, live there with your family, etc. So again, if things are not great in your own country and you feel you need to leave for whatever reason, then there's a place that will welcome you in the sense that you have the right to live there. So that can be because you feel you need to leave, or because you want to move there and spend some time there. And then when you have real estate in a country, typically you're allowed to have a bank account in that country as well, because you have real estate, so you need to have a bank account to manage utilities, etc. So it can be an interesting way as well to obtain a bank account in another country. And finally, from a lifestyle point of view, if you rent out midterm or on Airbnb, there's a place that you can call your own that you can go to on vacation, etc. So from a lifestyle point of view, having international real estate can be quite nice as well, to go on nice, family vacations. But so that all sounds good. And that's what people will typically sell you. And then they'll say you can make amazing returns, but we'll discuss this. People will sell you this whole package of how international real estate is the solution to, all of your life's problems. But the reality is it's easy to make mistakes when venturing abroad and buying real estate. So what I have here is a list of 10 mistakes. A few of them I had to learn myself the hard way. So some of these mistakes cost me a lot of money, and I'm sharing them here. So the first one is not using a good lawyer. So luckily, your American audience understands the concept of using competent lawyers when they venture abroad. So it's less of an issue that I see with North American clients. They generally value good legal advice. So whenever you go into a country, don't be cheap. Don't get the cheapest lawyer. You can find lawyers generally when you go to the page of the website of the US Embassy or the Canadian Embassy or the Swiss Embassy. Often they'll have lists of local law firms that they don't recommend them, but that generally have a good reputation. So if you go for one of those local law firms that are listed on the embassy websites, generally, yes, they'll be a bit more expensive, but two, at least you're dealing with serious people. And it's not like real estate law is extremely complicated. It's just that as a foreigner in another country, you don't know the process. You don't know what could go wrong. For example, in the Balkans, if you can buy real estate, and often the apartments or the houses don't have the proper permitting in place, which is not necessarily a deal breaker, but then you have to go through the legalization phase, which is extra costs and a few taxes that you need to pay. Sometimes you're buying from people, they inherited an apartment, but you want to make sure your lawyer needs to verify that the courts authorized and approved the inheritance formally. So, it's just, you need to go back into the history. And Colombia, for example, there's a whole list of hundreds of properties that used to own to drug lords, and nobody will touch them because they fear that if they buy this property, then at some point the guy's going to come out of prison, or his cousins are going to come to you and say, hey, this house, this villa that you bought belonged to daddy, we want it back. And then you have a problem. So you want to make sure that wherever you buy real estate, you hire competent and professional legal advice to guide you through the process. And often on TV, you'll hear about John who invested in Mexico and he got scammed, etc. When that happens, in 95% of cases, it's because John didn't use a lawyer. John just signed a contract directly. John trusted his buddy. John trusted his wife's cousin. John just made bad decisions by not hiring a proper independent lawyer. So that's the number one rule. That'll save you from 80%, 90% of problems that you can encounter. The second one is managing your expectations. Look, you'll see people online, they'll be promising you amazing returns. If you buy here, there, you'll make 20% a year, blah, blah. Honestly, I do this full time. I don't see such returns except on very rare occasions. And if there are such returns, typically foreigners don't have access to them. Because if you take a step back, when you go to buy international real estate, typically you'll go there for a week or two, see a bunch of properties with an agent, and then you'll choose one, you'll negotiate, go for it. Objectively, the best deal you can get is either market price or slightly better than market price. But you'll rarely be able to get a much better deal than locals. It's like you back home in your market. Let's say you're from, somewhere in North Carolina in some small town. Some guy from New York comes over for a week. he's probably not going to get the best deal. He can get a market related deal, but if there's a screaming deal out there, one of the locals will scoop it up before it's even listed. So manage your expectations from that point of view. Then it's the third point is when people are not clear in terms of their objectives. So I often come across people, consulting clients, and they'll be like, Ladislaw, I want to buy international real estate. I need to make amazing rental returns. I need to see great capital gains. It needs to be a safe country. I need to be able to get residency out of it. I want to spend, 2 months per year there, et cetera, et cetera, et cetera. There's no perfect solution. I can't think of a single market that ticks all of the boxes. All markets have their own issues. So you need to be extremely clear in terms of your objectives. Why are you buying international real estate? What is truly your objective? Do you want cash flow? Do you want to invest in a country that is geopolitically very different from your own country so that you get political diversification? Do you want currency diversification? Are you hoping to just buy something really cheap and get capital gains long term? Do you want to use the property yourself? Do you need a second residency, et cetera? You need to be very clear because you won't get everything. So if you try to get everything, then you'll often get you'll generally get nothing. So focus on what your true objectives are. And then based on these objectives, then you can make a much more sound decision. So that's really important because it's a big world out there. There are a lot of different markets and they all have a very different value proposition. So if you're not clear in terms of what you want, you'll end up entering the wrong market and then in the wrong market buying the wrong assets. 4 is not doing enough research in terms of the country where you want to invest. So it's important to understand the risks and the positives of each jurisdiction from a macro point of view. So if you want to invest in, say, Turkey, because if you buy for $400,000 worth of real estate there, you get citizenship within a few months for yourself and your family. So that's pretty cool. But you need to understand what are the risks related to such a country. There's inflation going on. It's in a war-prone region. The economy has its own issues. Regulations change quite a bit, etc. So you want to make sure that you really weigh all the pros and the cons. And that's the case for every single country. If you buy in Europe, do you want exposure to the euro? Do you want to buy right now in Europe with an energy crisis that's going to come now? Or would you rather wait until April and see how things work out? So you need to be very aware of the macro environment that you're investing in. And then you need to be aware of the micro environment that you're investing in. You need to understand how things work locally. So for this, I really recommend people join local Facebook groups or local Reddits. They can ask their questions. Often the expat groups locally are quite helpful because you'll see the typical issues that local expats deal with. So that's very important. Then point number 5 is not speaking to your CPA back home in the US. So when you buy international real estate, and this is absolutely not tax or investment advice, there are implications for you back home with regards to the IRS. So you shouldn't be scared of it, but you need to be aware of it. For example, there may be reporting requirements. If you're earning income from that property overseas, you're going to have to declare this in the US. So how does this work? Do you get a tax credit for the taxes that you paid in that other jurisdiction? So if you buy a place in Mexico, so right now I'm in Playa del Carmen, it's an interesting real estate market. If you buy something here and you rent it out on Airbnb, you're going to be paying taxes locally in Mexico. And then what do you do with these taxes? Do you get a credit for your US taxes? I don't know, but you need to ask these questions to your CPA to make sure that you're compliant. So it's not something that should put you off buying international real estate. It's just an additional line in your yearly tax return, and you need to just, respect the regulations. What I would say, however, is that once you start going international, you may need potentially a new CPA. So if your CPA is very local and he's potentially great in managing your businesses, managing your LCs, managing your personal finances, etc., your yearly tax returns, and then you tell him you bought an apartment in Montenegro or in Colombia, and then he might not know what to do with that, not because he's incompetent, but just because he's competent in other matters. So he might need to contact another CPA and link up with him to make sure that he gets the proper information and he puts it correctly in the income tax return, because he might have to analyze a double tax treaty agreement between the US and another country where there are tax implications. So it shouldn't put you off, but you need to be aware of this. Same thing if you open a bank account overseas, there are reporting requirements on a yearly basis with the IRS. So always speak to your CPA before making such a move, so that everything is fine and you're compliant, because you don't want to run into problems. So another issue, this one is very common, is before buying international real estate, not speaking to your bank back home. So let's say you live in Texas and you are going to Montenegro or you're going to Colombia and you want to buy real estate there. You fly there, you get a lawyer, everything, you negotiate the deal, everything's fine, you sign, and then you're expected to wire the money. And then what do? So you log on to online banking and you put the international banking details, you press send, and then suddenly, in some cases, some banks will tell you, oh, international transfers, oh, you need to come to the branch. You have a problem. Or they'll tell you, oh yes, transfers of more than $100,000, you need to come to the branch. You have a problem. Or they'll ask you, oh, we need documentation. And then you send them a contract in Montenegrin or in Spanish, and they'll tell you, oh, we need it in English. And then you're scrambling around and you're trying to get it translated into English, etc. So you need to speak to your bank beforehand, sit down with your banker, go to the bank, don't just call the call center, go to the bank, go to your account manager and say, hey, Sarah, I want to buy something in Colombia. I'm going to go there in the next month. I want to buy a property, approximately this amount. What documentation will you need from me when I actually buy the property? And can you assure that I can make the transaction remotely from my online banking? You need to sit down and have that conversation. Because I know of people in Hungary, for example, what's typical in Hungary is when you buy real estate, you pay 10%, you sign a pre-contract, you pay 10%, and then you have 2 weeks to send the other 90%. And in these 2 weeks, if the seller decides to cancel the agreement, they must give you your 10% back times 2. And if you don't send the rest of the 90% in the 2 weeks, then you lose the 10%. Now, I know of these French people who went to Hungary, they paid the 10%, and then when they wanted to, they signed the contract, and then with the lawyer, everything all good. And then when they wanted to transfer the 90%, their bank online didn't let them. And then, they had to call, and the bank came back to them, and 2 days later, the bank was like, oh yeah, we need to understand what it's for. And they replied, they say, well, it's for real estate purchase. And then they were like, okay, sure. And then a day later, they come back and they're like, oh, we need it translated into French. And they're like scrambling. They're trying to find a translator. They get it translated into French. And then the bank is like, oh no, but it needs to be a certified translation. So then they had to, get the translations certified. They lost another day. They sent everything. Then the bank was like, oh, yeah, we need the escrow agreement because you're going through an escrow, through a lawyer escrow. Like, oh, so they had to find it. Eventually what happened is they didn't make it in the 2 weeks, and the Hungarian sellers, not very friendly, they took the 10%, ran off, and sold the property to someone else. All because these French people did not speak to their bank beforehand. So always remember, once you're going international, the bank, whatever bank you're at, will view you with suspicion. You will become a suspect, and things will change very quickly. They'll view you as a compliance risk. So you need to do everything you can to prepare the transaction in advance and reassure them that it's absolutely not a transaction, that it's absolutely not a compliance risk, and that you want to remain compliant, and that you will, you will collaborate all along, and then they'll give you all the information before. So that's absolutely crucial to plan this in advance. Mistake number 7 that I see is people not understanding the legal obligations that they have in the other country. So if you are buying in, let's say in Hungary, you're buying an apartment there, what are the income, like what's the income tax? You have to pay income tax there. How does that work? Like, what are the income tax rates? Like, because you don't want to get busted for tax evasion in Hungary. That's also not very helpful. What are the property taxes that you have to pay, etc. So, a good property manager and a good local lawyer should be able to point you towards a good accountant who can help you with all that. So obviously, that's not a problem. Again, it shouldn't scare you. It's not that complicated. It's just, you'll probably just have to give power of attorney to a local CPA, to a local accountant, to file your taxes on a yearly basis to make sure you're compliant. That's it. So they'll just, once a year, they'll ask a statement from your property manager or from yourself. You'll send it, they'll prepare the tax return, and then, they'll ask you to sign it, or if they have a power of attorney, they'll sign it themselves. They'll just ask you to approve it, and then that's it. But you need to be aware of what your obligations are in that other country. Like, foreigners don't just go to the US, buy property, and just kind of wing it and not pay taxes to the IRS. It doesn't work this way. It doesn't work like that in the US. It doesn't work like that overseas either.
I do want to remind everybody too that they can put questions in the Q&A or the chat, and we'll answer those as we go along for you.
Yep, for sure, for sure. Another one is keeping a bad property manager. So I've made this mistake twice. Once I had a property manager, he was sending me the quarterly reports, and then gradually, it wasn't every 3 months, it was every 4 months, and then gradually every 6 months, and then he just disappeared with my money. So it took me about a year to get my money back. I had to, because often in these other countries, if you're going through court cases, etc., it'll take a long time. It's not in your language. You'll have to hire a lawyer. It'll be expensive. So I, managed to find out where he was hiding out. I had to track him down and physically get my money. So, once you have a property manager that starts being a little iffy, cut your lot, like just get rid of them fast. And the level, and that's important for Americans to understand, the level of competency generally in the world outside of the US in property management is a lot inferior to what you guys have in North America. So I've done deals myself in North America, and generally property management is fairly competent. Once you start going overseas, the quality will generally be lower, and at times substantially lower. So just be aware of this. So you need to, be able to make radical decisions. The second time is I bought in a country in West Africa after a civil war, and I bought in a market where there was only one competent property manager. And that was a problem in the sense that he got a divorce, he left, and then I was left with his local wife to manage the properties. And then that just became a catastrophe, and she ran away with some money. So my issue there was that I invested in a market that didn't have enough depth of talent of property management. So now I don't invest in markets where I know that, I depend on one guy only, and there's no backup solution. So if that's the setup, I'm gone. I'm not investing there. So now I really focus on markets where I know that if the guy starts messing up or playing games, I know there are other people that I can transfer the property portfolio to. So that's very important. Another one is people who buy in countries without taking into account the currency risk. Right now, the dollar is extremely strong, so that makes investing in other markets very attractive. But you need to make a conscious decision when you invest in a country. What currency are you actually investing in? Because, for example, looking at Turkey, the lira is a catastrophe, the Turkish lira. But if you invest in core areas in downtown Istanbul, it's actually mostly a US dollar denominated market. It follows the US dollar because the center of Istanbul is very international. So if you invest in core Istanbul, though nominally it's in Turkish liras, in effect, prices track the US dollar. But if you go into the outskirts where the population is more local, you're actually investing in liras. Same thing in Europe. You want to be exposed to euros right now. If you buy in Mexico, some markets are more correlated to the US dollar than other markets. So when you go into where I am right now, Cancun, Playa del Carmen, Tulum, there's some very interesting real estate deals. That's mostly a USD market. Officially, it's pesos, but it tracks the USD more than very, very local markets. So you want to make a conscious decision in terms of what currency it is actually that you're playing when you're making that real estate investment. And the last mistake people make is just assuming that things are like back home. They're absolutely not. As soon as you leave North America, things are very different. Depreciation is something that, like, real estate depreciates in North America. It's literally a line in your income tax statement. For Europeans, if you buy in a historical building in downtown Budapest, there's no depreciation. The building only gains value with time because it's got historical value. When you buy in downtown Budapest, which I've done, I have lovely apartments in historical buildings next to the parliament. These buildings have been around for 100, 150 years. They've seen many world wars. They're still there. And every year they get nicer and prettier and more rare. So market dynamics can be very, very different in other markets. If you come here to Mexico, it's rather like in America. You buy some condo, it depreciates like in America. The same thing in Europe. If you buy into a new building, that'll depreciate more than a historical building. So you want to take these factors into account. Same thing with, are the laws pro-tenant or pro-landlord? In most of the world, as a landlord, would you rather invest in Texas or in California? Well, it's the same thing in the world. Do you want to invest in countries that are pro-tenant or that are pro-landlord? Some countries, like in Portugal, a country that's often promoted, it's not a good place from a rental point of view, in the sense that if you have tenants that stop paying, it's extremely hard to evict them. So it's not like in Texas, where in a few weeks the guys are on the street. In Portugal, it can take months, sometimes years, to kick people out. In the meantime, you're not getting anything. So you want to be very clear in terms of regulations like this. Same thing with Airbnb. You can't just buy an apartment and assume that you can do Airbnb. And you need to do your research and understand what are the regulations. Some markets ban Airbnb. Some markets require you to register, to go through a vetting process, to pay extra taxes, and then tell you that you can rent your property for only 120 days a year. So that's a bit limiting. So you want to make sure, what are the markets that you're investing in? What are the Airbnb regulations? So that's important. Same thing with, property taxes, they vary a lot, just like in the US from county to county, I'd even say state to state. Property taxes are very different from country to country. In France, for example, they're really high. It can easily be 1% of the value of your property. But if you invest in places like there's like these apartments I have in Hungary, some of them are worth what, like $250,000, and I pay maybe $300 or $200 in property taxes a year. Other markets, you pay only for $200,000 property, you'll be paying only $50 in property taxes. So needless to say, that helps your rental returns a lot, like your yield cap, your cap rate, your yield calculation. So you want to look into this. And then also, do regulations change a lot? So Western Europe is absolutely obsessed with the green transition. So it's reached a point where in France, for example, in between tenants, there's this guy that you have to hire because you need his certificate to be able to check new tenants in, and he'll go around and calculate the energy efficiency of your apartment and make sure that all the plugs are where they should be, that the fire regulations, blah, blah, blah. And if there are issues and these regulations change all the time, then you must make changes before tenants come in. And if your house is deemed to be not green enough, then you're not allowed to rent your apartment out until you make all the renovations. And every year it becomes stricter and stricter. So that just accelerates at a massive pace the depreciation cost of your house because of all of these government regulations, especially in Western countries. So personally, I prefer to invest in emerging countries, more emerging economies, Hungary, Montenegro, Latin America, etc. Because Turkey, there's a whole bunch of countries, because the government is a lot less involved in what you do in your own house. Because the more the government is involved in your house, the more expensive it becomes. And they force you to make changes that from a pure investment point of view are absolutely not worth it. So these are the sorts of things that you need to know before investing in a market. And trust me, when you buy something in France, that little French chick will be selling you that nice apartment somewhere. She's not going to be telling you about all these regulations and that, like, oh, actually that house will need a full renovation in 2 years because it's considered not green enough. So you really need to know these things beforehand. And it's not always easy to know. And it's not the sort of information that typically you'll find. If you type invest in France, no one's going to give you that information. You don't find that information in English and anywhere. So you need local market knowledge. And the last mistake people make, I believe, is not buying international real estate. So I know this list is a bit scary, but the reality is if you do your due diligence and you hire the right experts to help you along the way, you won't make these mistakes and you will have that extra diversification in your portfolio. So, and what I find especially interesting right now is that in an environment of rising interest rates in the United States and North America in general, that's absolutely not bullish real estate in the US, because people tend to think of real estate as a hard asset, but in reality, real estate in the United States is partially a financial asset because there's so much leverage in the market. So that's why real estate prices constantly do yo-yos in the US. It's because it's based on a huge part of the valuation of your own house and your investment properties in the US are based on interest rates. But when you go and invest in markets where interest rates are already 9, 10%, there's very little leverage in the system. So whatever happens to interest rates, if they go up, it's not going to have an impact. So contrary to what many people believe, right now, a lot of emerging markets have less downside than a lot of the Western developed markets that are based on leverage. So when you invest in such developing countries, you're also investing in a completely different monetary policy. And that's, I think, in the current environment, this is very interesting and absolutely unique diversification. And I have a lot of US clients from all political stripes, whether liberals, libertarians, conservatives, etc., that are worried about the trajectory of the United States. Some feel that they're either being persecuted now, or they will be in the future, or there's the potential for them to be persecuted. Well, in that case, if you don't feel that safe in your own country, having money outside of your own country is an interesting way to have a bit more freedom in your life, especially if those assets outside of the country give you a residency, or at least a call option on residency, so that if things were to take a bad turn, wherever it is you are, you can go somewhere else. So I saw this firsthand in Montenegro, for example, because if you own real estate in Montenegro, it gives you, so Montenegro, beautiful little country south of Croatia, mountains, the Mediterranean, well, Adriatic Sea, just beautiful little country of 600,000 people. I typically spend every summer there, and a lot of Russians and Ukrainians had real estate there. And then when the conflict broke out, you had tons of Ukrainians that found their way to Montenegro, and they then used the fact that they own property in Montenegro to apply for residency. And same thing with Russians who were in Russia and were under sanctions, so they had issues running their businesses, etc., from Russia. They were able to move to Montenegro, claim residency based on their property ownership, live in Montenegro, live in peace, and continue running their businesses. So throughout history, whenever there has been a very large crisis in a country, having overseas real estate has been very helpful for people looking to get away from troubles. So I think this covers a lot of the ground, Ryan. So if
Awesome.
anyone
No, I appreciate it. It's great information.
oh, one
I have a
last thing.
question for you though.
Yeah.
Because I've seen other, I mean, clients do it with their IRAs and things. And are you buying all of these personally, or do you have to get other entities? You know, like for example, in the States, you know, a lot of people will use LLCs for asset protection. But overseas, I've seen people run into problems that they can't buy it because they don't have dual citizenship, like you're saying, or already have that, because I know you've bought multiple properties and have done that. You want to elaborate a little bit on that?
Sure. So in most countries, you can buy real estate without being a citizen or a resident. Generally, most countries that don't allow you to buy real estate are mostly in Asia, but the rest of the world, generally, you can buy real estate. In terms of structure, it depends from country to country. Sometimes there are tax incentives if you buy property through like especially if it's a new build, you buy a new apartment off plan through a company, then you can gradually write off the VAT, the sales tax that you paid when buying the property, or you can buy in your own name. In most of the world, people generally buy in their own name. Why? One, because creating companies locally is typically more time consuming and more bureaucratic, and requires, and is just more complex to manage than just having an LC in the US. The US is quite unique in the sense that just opening an LC is just done like quickly, easily, and it's easy to manage. Generally overseas, it's not. You need a local accountant. And two, because, you know, it's not like most countries are not like in America, where if your tenant trips because of his own stupidity in your rental property, then he goes on to sue you for millions and tries to like take everything from you. In most of the world, people are not like that. Especially in the emerging market, like I'll give you an example. I'm selling a property in Montenegro. It's a farm, a little farmhouse. And there was this guy from California. He wanted to see it, and I wasn't there, so I told him where I hid the keys on the property. So he just, you know, and I gave him the Google pin map. He went there, he drove there, he found the keys, and then he walked around the property, and then he fell in the river. So when he told me that, if this had been in America, in a property in my own name, like someone visiting my property without me being there and falling into the river, like, oh my God. But like in Montenegro, what is he going to do? I mean, I just laughed, and he laughed because, he understands, like, we're not America. Like, that's just how things happen. Like, what he would do, he'd go to the police and say, I fell in the guy's river. The police would just laugh and tell him to go for a walk somewhere. So it's in most of the world, people don't just sue each other over complete nonsense, especially not in emerging markets where I specialize. Like in Mexico, no one's going to sue you because they fell down the stairs. Like people are just going to look at the person and say, you were dumb for falling down the stairs. Like the judicial system is clogged up enough as is to be dealing with this nonsense.
If you had to pick one spot, what's one of your favorite spots to invest?
Look, again, that's the whole thing. There's no like single spot that ticks all the boxes. So it really depends on what the person like wants. What is the person's like objectives, So, if you want like beautiful lifestyle real estate where you can get a plan B residency and you can rent out for part of the year, places like Mexico, Colombia, Montenegro are great, all nice countries. If you're looking to just go hardcore, just go for capital gains and you're just not scared, Venezuela is interesting. If you're looking to buy in a gorgeous European city, where the yields are not necessarily that attractive, but the entry price point is fine, and you're buying beautiful historical real estate, that you're proud to own. Hungary, Budapest is a good market. So it really depends on people's objectives. And that's what we do in my consulting sessions. We say, cool, this is your budget. What are your objectives? These markets are potentially interesting. That's how you go about it, et cetera. So it's it requires a whole strategy, essentially,
Awesome. Well, I think that's all we have at the moment, but can you give your contact information for everybody and how they can get to your website?
Sure. And just before that, just one important point. When I say international real estate is great diversification, I'm not out there saying, put all your money, get all your money out of the US, et cetera, blah, blah. Like there are all these like doomsday sayers, the US is going to crash and it's the end and blah, blah. Like this is absolutely not what I'm saying. What I'm saying is it's very interesting diversification. And if people start their journey, they should do it slowly, gradually buy a place in one country, be a second in that country, then, gradually go to other countries. It's something that you do gradually and then you learn along the way. So everything in investing is about being, reasonable in your approach. So the best way to reach me is essentially to follow me on my mailing list. It's called the private list on thewanderinginvestor.com. So that's really the best way. There's my contact information on the website as well. I have a YouTube channel, The Wandering Investor, Instagram as well. But the best way really is my mailing list. And then that's where you get all of the updates in terms of international real estate, also international stock markets. I go venture into random markets like Uzbekistan and African stock markets, and also all the interesting residency plans across the world, and also buying second citizenship. So I discuss all of these points in my private list, which is free.
Awesome. Well, I appreciate you being with us today. Great information. And follow them and get all the updates. Appreciate it.
Sounds good. Cheers, Ryan.